Welcome to another session in our accounting class, and today we are continuing with our course in special aspects in financial accounting, and what we'll be looking at is the topic of published accounts. So here we have an example question called Tuff Tank Incorporated, and we will be preparing the financial statements in a format suitable for publication with respect to this question. So we'll go through the question. In our previous video, we would have introduced you to the elements of published accounts and what the Company Act would state, and all the various elements that we will be looking at in this particular question. So the question states that Tuff Tank Incorporated had the following trial balance at June 30th, 2016. And you have ordinary shares. The value of our ordinary shares, the par value is $2. We have our share premium, retained earnings. This is a profit. We have land, delivery vehicles, office machinery. So you have some depreciation that has accumulated on the delivery vehicles and the office machinery. We have inventory at the beginning of the financial year, July 1st, 2015, office expenses, salary and wages, interest received, purchases and sales. So remember, purchases will have a debit balance, was sales revenue. It has a credit balance, so the sales is on the credit side, while purchases is on the debit side. We have an allowance for doubtful debt, return inwards, utilities, bad debts, delivery expenses, accounts receivable, accounts payable, carriage inwards, insurance, return outwards, bank cash, a loan interest, and a 6% bank loan. And our trial balance balances at $446,535 on both sides. The trial balance must balance. So what we have some additional information. So the additional information states, number one, that inventory on hand at June 30th, 2016 was valued at $19,250. This is our closing inventory. Then it states, number two, at the end of the year, the company still owed $315 for office expenses. So this is accrued office expenses. However, remember that we stated in our earlier video that we must follow the accounting principles in terms of recording all the items within the financial statement for the current accounting, current financial year. Number three, the accountant discovered that the company's insurance was prepaid by $250. Number four, half of the salaries and wages was paid to the delivery crew, and the remaining half was paid to the office staff. So this is salary and wages that was given in the trial balance. We have to prorate it between the delivery crew and the office staff. So that will be between our administrative expenses and our selling and distribution expenses. Number five, the allowance for doubtful debts is to be adjusted to 4% of accounts receivable. So we have to calculate the allowance on our doubtful debts and see if it increases or decreases, and then record it accordingly. We have corporation tax of $3,270 that is to be charged for the year. And we also have depreciation is to be charged on the delivery vehicles at a rate of 5% of the cost, and on office machinery at 8% using the reducing balance. So we're using two depreciation methods here for the delivery vehicles, that's the straight line method, and for the office machinery, that's the reducing balance method. Number 8, the loan transaction took place on November 1st, 2015. And I guess this is something that we need to know with respect to the loan, because obviously we will be having some interest on our loan. So what are we required to do? We are required, A, to prepare the company's profit and loss account for the year ended 30th of June 2016 in a form suitable for publication. And B, clearly explain why companies are required to publish their financial statements. And C, identify 2 users of a company's published accounts and give 1 reason why each user identified would be interested in these accounts. So B and C I would not be doing because that is theoretical, and some of that information is already in a previous video, but we will do the accounts, the profit and loss account as instructed. Basically, that is the income statement they want us to do in a form suitable for publication. And I would even go on to do the statement of financial position as well. Okay, I think I will do the statement of financial position. So let's go to our spreadsheet and look at how we would go about doing this question. We are here in our spreadsheet at this stage, and you see that I already have the heading Tuff Tank Incorporated, and this is the solution, and I have a heading here, notes to the accounts. Remember from our previous video, we would have stated that you have to prepare notes to the financial statements showing, and that is basically the calculation. When we looked at the format for our income statement, one of the things that was stated that in the income statement we have notes to the accounts, and the notes actually detail the various calculations such as turnover will be written in this section. So all the calculations that I need for the information for my income statement will be placed here, and then those final figures will be used in the income statement. So my note 1 is the calculation for my turnover, and we are going to show how we calculate it. So turnover, this is my note 1, and my turnover is my sales. So let's see what the sales figure is. Our sales figure from our statement in trial balance is $155,220. So let's go back and put that in. And before we go back to that, I would like you to know that our turnover is calculated by taking our sales, and if there are any returns with respect to sales, that return will be subtracted from the sale to give us our turnover. Now, if there's no returns, then our sales figure will be our turnover figure. So we have return inwards of $375, and that will be subtracted from my $155,220 to give me my turnover. So let's go back to the spreadsheet and into those figures. So sales, $155,220 less returns inwards, and that was $375. So then my turnover is equals to my sales minus my sales returns, and that gives me a turnover of $154,000 and $154,845. So my turnover, $154,845. Right? So then let's go to note 2. My note 2 will be my cost of sales. So how do we normally calculate our cost of sale? Our cost of sale is usually our opening inventory. And to that, we usually have to add our purchases. If we have any returns, purchases returns, we are going to subtract our purchases returns. So returns outwards. And if we have any transporting or freighting or duties that are associated with our purchases, then we would add those as well. So we're going to add carriage inwards, and then we would subtract our closing inventory. So let's go and look at those figures. So you should really pause and keep looking at the question. So our opening inventory is $20,760. Our purchases $76,150. Our return outwards, is $300. Our carriage inwards is $190. And where we get our closing inventory from is the additional information. And our closing inventory is $19,250. So let's enter this information and find out what our cost of sales were, or our cost of goods sold. That's the other name for it. So opening inventory, $20,760. To that, we are going to add $76,150. We're then going to subtract $300, and we're going to add the $190 and subtract the $19,250, which is our closing inventory. So our cost of sales is $77,550. So our cost of sales, $77,550. So when we come back in our next video, what we will be looking at, calculating our administrative expenses and our selling and distribution expenses. So in this first video, we went through the question and we started our notes to the accounts by calculating our turnover, which is sales minus the sales return or return inwards. And then we calculate our cost of sales, or in other words, also known as cost of goods sold, by taking our opening inventory, adding our purchases to that figure, subtracting our purchases returns or returns outward, adding our carriage inwards or any duties related to our purchases that would increase the cost of our purchases, and then we subtracted our closing inventory for the period, and we came up with a cost of goods sold figure of $77,550. So it is important to note these figures because we will be using them in our income statement. So I will see you in our next video. If you like this, if you like what was shared here, I would want you to like the video, share the video, and subscribe to the channel.